Wow, this is one of the craziest starts to an earnings season that I've seen since I've started trading. So let's go ahead, take a moment to break it down. Back from vacation, feeling fresh, coming at you with a late Sunday night report. Last week was really interesting to say the least. Now, the three big things I'm taking away from the actual earnings was Tesla did much better than I expected, although guidance was still pretty ambiguous. And I think that some people were saying, oh, they're really good on their cash. But if you actually ran through the cash flow, you take out the liabilities, they're actually at zero for cash, which to me is actually really bearish because it means that this company wants to invest in more production by building another factory or something. They're going to have to get more debt and do a round of financing to do that, which is usually correlates to something bearish for the stock. Multiple avenues they can take, but we're not going to dive into that. Netflix was interesting. I thought Netflix was a miss, but they did well on subscribers. So the market took that, ran with it. The stock ended up blowing up, burning tons of the put holders. Maybe it was even like a short squeeze situation when you think about it, based on how the option positioning was heading into that earnings. And then Snapchat was the third one. Snapchat just ate it. And I was really bearish when I was going on it. I said, maybe the stock has this priced in. They did not. Now, the actual earnings miss wasn't that bad, but the refusal to give guidance for the future is really worrisome. And obviously the market took it as such with a 30% drop. Now, based on your risk appetite though, I do think the current price could present an interesting opportunity. Now let's talk about some of the plays from last week. It was definitely an interesting week. Coming in on a Monday was a great day, a blowout great day. Held puts coming into Monday. Market melted all the way down to 380. I'm like, okay, the market's catching up with my thesis. This is great. I'm getting tons of validation. And then we did this melt up. Tuesday looked worrisome. Lots of volume coming in here. Tried to place some more puts into the next day. Took some burns throughout the week. Little ones, because I've had a lot of cash right now. And I was trying to be cautious about it, but I did see lots of negative headlines last week, was thinking any of these could bring this market down, and it didn't. But when we touched here on Friday, we had our second blowout day for the week, leading to pretty much only 2 good days for the week. But if we look here on Friday at this 400 candle, look how awful that candle looks. Look at that candle. That is a miserable, whoa, that was way too zoomed in. That's a miserable candle right there. So entered in puts again, sold these around the 396 level, and then rolled those into some weeklies that we had already purchased. And that played out great heading into this week, where I do expect more bearishness to come. And remember, look how weak this touch was on the 400. And even though the market was reacting positively to some of these earnings, I do think the underlying does not look that great, which actually brings us to probably another part of the market that we should look at, and that would be UNG, which was also a big winner for the week. We hit 50% on UNG for energy, which was beautiful. It was great, wonderful, loved it. Started to take some profits here though. And the other thing I want to talk about, and we'll get into earnings here in a bit, but I do want to talk about this weakness that we've been seeing in XLE. Now, there's a few things here that we should kind of discuss. Lots of people have been saying, hey, the recession will bring down prices. And they're right. I don't think I've outright acknowledged that to the extent that people are really happy with, because of some of the feedback I'm getting across the socials. I am aware that there will be price destruction in a recession. There's just going to be less demand. People aren't going to want to drive around when gas prices are so high. And there's these long-term deflationary effects from technological advances. I do want to acknowledge that as well. As cars get better and better, they get better and better gas mileage. You don't need to buy as much gas. And there's more EVs on the market. And that's just small examples of some of the long-term deflationary effects that are going to play out for this sector. I'm not pretending like that doesn't exist. But what I am factoring into what I'm looking at is the Russia-Ukraine situation, the total amount that the globe needs, the draining from our reserves and from global reserves, the issues going on with Europe or with Venezuela. These all play major roles. Remember, this is an international market, and the government can only do so much to really make it seem like they are handling the issue. All right, they're playing with optics when they play with prices. There still is a total demand that needs to be met, even if the demand destruction has come into play, which it has. So when I'm looking at this and I'm trying to take both sides, all right, this is a big thing for trading. You know, it doesn't matter who you are. You could be a professional trader, full analyst teams helping you and research teams. But at the end of the day, a lot of what we do is trying to take the probabilities of the different potentials of what could occur and factoring into our portfolios and into our trading. Now, for me, this looks like taking some capital out of oil. I know there's going to be price destruction, but we're also down 30% from the highs. And I have to acknowledge that some of that looks to be priced into this market. However, there's still lots of smoke and ambiguity about how far down it could go. And I have to be also worried about some capitulation from different hedge funds that are still massively piled into this. There could be some panicking out if the market starts to crash. So I need to react to that. I need to react to the price action regardless of what my convictions are. Markets can be more irrational than you can be solvent. Remember that. So acknowledging that, I've taken some of that positioning out, and because I don't want to be caught up in bad volatility when I'm going to want cash for this market melting down, because I want to have some solid positions heading into those elections, which we talked about last week could be a great bullish opportunity, one that I'll actually have conviction in rather than that small term rally that we saw this week. You know, lots of people got excited about these small tech rallies. But remember, we got 50% on UNG on shares alone. And to me, that was the real rally to catch and to take profits on. Getting into this short-term rally into SPY, which looked really weak. It looked like buyers were really weak. I don't really want to play that. And when you saw the volume and momentum of these downside moves, to me, that's where I want to be. I want to be playing SPY on the downside, playing energy on the upside. And remember, those positions, my consensus, anything I'm talking about, first of all, it's all in the past. So I'm talking about things that have already occurred, and they could change on a dime. So make sure that you're in the Discord so you can keep up with what's going on. Now let's dive into the economic calendar for this week. Okay, be honest with me here. When's the last time you actually planned out your spending, your finances, or planned for your retirement, or how to preserve the wealth you already have? Listen, you need to call Rob Reed. There's no one better. Learn about different insurance vehicles, annuities, or different investment strategies to help you create or preserve your wealth. It's for your success. You know you need to get done. I know you've been pushing it off. Life insurance, who wants to talk about that? But honestly, learning about index-based life insurance, which is basically like a rich man's Roth IRA and allows me to be my own bank, was huge. So if you want to learn more, call the number above or visit cwrpcg.com. New home sales, I don't expect that to be good. I still expect that to be on the decline. We can see the consensus is pretty much saying the same. And then coming into Wednesday is going to be a big day. That's where we're going to get the Fed interest rate decision, Fed press conference. Remember, as this market continues to melt up, it only gives the Fed more reasoning on why they can crush it even more and bring interest rates up even higher, continuing to roll off their balance sheet, which is also big. Thursday, we're going to get our GDP data. And, you know, I'm expecting the consensus of, hey, we're in a recession. Friday is going to be personal spending and personal income. Those will be interesting to watch as well. And actually, it looks here that we've got a consensus above the previous. So this will be interesting. Consensus forecast, there's some differential there, which means that could be an actual market mover. Next week's also going to be really big, and we're probably going to do a special video Sunday, a special report on why this is going to matter so much for the ISM manufacturing. So make sure you don't miss next week's video. And now let's go over some earnings. I'm going to try to keep these short. There's tons of earnings this week. We're in the full swing of earnings season. It's been a wild ride so far. Let's break this down. First thing that stands out to me is Logitech. We talked a lot about how semiconductors are kind of flowing back into the market. I expect that to hurt some of these companies that have done really well with their pre-built computer sales. And because people are starting to be able to afford to build their own again now that there's not these huge price inflations on the individual components. So that'll be interesting to see how that plays out for the sector. I do like to pay attention to that because in the past, that's been really good trading opportunities to kind of play around that business cycle there. And we'll kind of scroll through the rest of Monday. Nothing else is really catching my eye, and I don't want to make this a 4-hour segment, especially since it's getting late. This is already a late Sunday night report. Tuesday, Microsoft. This will be really big. Alphabet, also really big. Visa, Coca-Cola, McDonald's. I don't really have big opinions on this. I will actually add, for Coca-Cola, Pepsi in general, we're seeing a lot of small drink companies start to do really, really well. And there's a certain breaking point for these companies when you're selling a product like a new drink. There's a certain breaking point of sales that you can reach where you become an actual player in the markets, when you hit that Monster or Red Bull level. And I think that the health craze is also starting to hit these companies, and they're just becoming more and more and more disconnected with their advertising. Now, these are still solid names that are everywhere. I'm not saying that they're going to die tomorrow, but I do kind of wonder about these brands looking 10 years from now, especially when you're seeing big names like Skittles suddenly get hit with major lawsuits. And I think it's going to make, if we see more stuff like that, I do think it's going to push this health craze further and further down the road, where maybe in the future, we see kind of a push away from Coca-Cola and Pepsi, or they start to make acquisitions of some of these smaller brands that have really hit those big, sales points where it's like, okay, we now have to acknowledge this as a brand, because they're now out of the scope of getting crushed by these Coca-Cola, Pepsi brands. It's interesting. It's something I've been paying attention to. That's all I'll say there. Kind of scroll down through here. Enphase Energy is going to be interesting. I don't really have anything to add to that other than the fact that they are going to be hurt by the supply chain issues, but they're probably going to get some extra attention. They're still benefiting a great deal from the ESG subsidiaries and such. Pentair, Zions, no, okay. Nothing really stands out to me there. So the big ones so far are going to be Microsoft and Google for Tuesday, and it's Meta, Facebook. This is probably a good point to talk about Snapchat and how it scared the rest of the companies. Actually, this applies to Google as well, but there was a kind of an ad scare there. And I actually mentioned this in the Discord as well, where it's the real ad-ocalypse, not the cancel culture version of the ad-ocalypse, but the economic version of the ad-ocalypse. And I can't say ad-ocalypse anymore. I'm going to mess it up. I'm already barely pronouncing it. The idea here is that as the recession begins, companies have less to allocate towards actual advertising, and becomes more and more important what they actually spend their advertising dollars on. So are you going to go and advertise with someone like Apple, who has now limited how much you can see and what demographics you're reaching, or how that advertising is performing? Or are you going to go to an influencer who you can clearly identify who their demographics are? If it's someone on YouTube, someone with a Spotify podcast, an Apple podcast, or their own, maybe on Luminary, you have more data there to see who's actually viewing it, and you could get a better idea of who the viewers are of the content that you're advertising on. And I think this is going to build more into the idea of that creator economy, which I guess we'll do a separate video on if you're kind of fuzzy on what I mean when I say that. This video is already going to be too long. I'm not going to elaborate on that now. But all in all, what the takeaway right now is that it is causing a scare for companies that make most of their revenue off ads. And that extended to Facebook, extended to Google, it hit Twitter. There's another one that got hit. Roku got hit by that as well. So that is something that Disney got hit by that a little bit. And that is something to keep in mind. Disney, because of their 50% ownership of Hulu. So that is something to also keep in mind. I'm about to derail myself. We're not gonna get into the stream wars. Although YouTube, for me, is a big winner. Cool. Scrolling down here, Shopify. Shopify is at a really interesting position, and I actually had some Shopify, and when the market was reaching those highs, we kind of allocated out of that. Had some nice gains there. I like Shopify, still love Shopify, still love these companies that empower the individual to make extra revenue on the side or start their own business. Entrepreneurship, this plays in the creator economy, and I think that this will be a big company that's here to stay. However, they are obviously going to suffer a lot of pain through a recession, because a lot of small businesses are going to get hurt a lot, especially when it becomes more and more expensive to grow and to borrow, grow, and expand. So there could be a lot more pain on the way for Shopify. It's hard to say if the lows have been in, maybe we'll do some charting on that this week and provide some more clarity there and see how earnings play out. There is also, we also passed over was that Rockwell we passed over? I'm fairly sure that's one of the big, yes, this is one of the big warehouse automation factories, which I was really big on, but didn't really see the price appreciation there that I wanted to see. But I'm going to continue to keep an eye on this sector because there's still a large amount of warehouses being built in the U.S. right now. Where people are getting these large amounts of supplies and they have to keep them somewhere, and they're looking to not hire people when wages are super high, so they're looking into automation, right? Makes sense to me. We'll see if that continues to actually play out though, because I think it could set up some nice, long-term positions that play out well. Nothing here. Again, I don't want to make this too long, but people did enjoy this, kind of scrolling through here. You can pause the video if you want to read through the names. Hopefully it's legible enough. Maybe I should zoom in more. Leave a comment down below if you want me to switch up how I do this. Nothing's really standing out to me at Cheesecake Factory. Every time I go to Cheesecake Factory, it's dead as all get out. I don't know how that company is still doing well. Yeah, that's all that really stands out to me. For Wednesday, let's go to Thursday. Apple, that was the company I was missing earlier that gets hurt by this ad pullback. Amazon's going to be interesting. They just had a big healthcare buyout. I still think they got a lot to do before they can actually become a staple in the industry, but I do think that that's the big one that they're after. I would love to see these big tech companies actually make bigger moves into education, which is, one of the big sectors for the economy that I think is just ripe for some innovation and changes. I think the whole idea of having a textbook has just become outdated. If you want to learn about technology, you need to do something other than a textbook, because every year you need a new textbook. You have to write the whole textbook. Why? You could just use the internet and you could keep up with things like that. The professor can just use more modern tools to help teach students and, create packets or something. I don't know, but just a book to learn about something like coding is so idiotic to me. It doesn't make sense. These industries change too quickly for the education system that's set up right now. It hasn't modernized. It desperately needs to. And I think a lot of these colleges have also just gotten to the point where they're not changing the way that you learn, but they're tripling and quadrupling their prices just so you can have a nicer pool. Like, that wasn't supposed to be the point. So I think it'll be interesting to see what kind of innovations and who actually wants to tackle that in the education sector as well, because it's really important and someone needs to step up and do it. Intel will definitely be watching Intel. Let's look at what else we got here. Energy, RL, no, doesn't stand out to me. Oh, there is a lot. I'm going to have to edit some of this out. Roku will be really interesting. They got hit by the ad dollars as well. At some point, Roku is going to be a really great company to purchase, in my opinion. I think owning the actual device will be a great moat for them. Then they also have a moat with the way that the programming is set up. A big thing to notice here is, though, look at last year's EPS, look at this year's. Roku's suffering a lot. So we're going to need to see if they have the leadership that allowed them to pivot in this point in time and become, once again, a profitable company, because they're in danger right now. And let's see here. All right, that's pretty much Thursday. Let's go into Friday. ExxonMobil. We could see what the international markets are doing to these. Let's say a 3x right there. This also looks more than a 3x for Chevron. Remember, this is international market effects. This isn't just the U.S. market. They sell to an international market. That's what dictates the prices they can sell at. And you could see how well that's doing for this industry. And I want to see what their guidance looks like as well, because that will also have a major impact on XLE. So I'll be paying special attention to these here too. ABVI is going to be really interesting. The other thing I want to add about these oil companies is that we've heard the White House say multiple times that they have no direct communication with the leadership here. However, these should probably be the people that should be dictating to the U.S. on how they should handle a lot of the things going on with energy. I know big oil, evil, terrible. Yes, true. But you still need to have a line of communication with people who are the most informed with the sector. And you have to keep in mind that they're going to tell you whatever helps them the most, so that you quit, hammering on them about ESG and stuff and hurting their, future. But you still need to listen to them, have them, in your ear, and still have some line of communication. I don't like locking them out, because they still have good that they can do, or at least keep you informed on what's going on. And I think this administration is doing a terrible job of staying informed on what's going on, because they go, la, 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 I don't like you, so I don't have to listen to you. No, stop that. So the best growth you could do as a human is talking to people you don't like, because different perspectives can be really beneficial for you. Anyways, AbbVie, it's kind of a small biotech play as well. They kind of touch all aspects of healthcare and medicine, and these companies are really great to own during recessions, because we still need medicine and we still want to make innovations for the longevity of the human race in these industries. So it's been an interesting one. I try to keep up on the big names in the sector as well, especially given my background. And that looks like about it for Friday. So that covers it for earnings. Of course, I'm sure there's something I missed through the earnings calendar. There's a lot to go through. Remember, if you leave a comment down below, or if you join the Discord where the conversation is always continuing, we can talk about that there as well, or about anything that I've talked about in this video so far. Now, for this upcoming week, we're also going to do a Q&A in the Discord with some other traders and some hedge fund managers. So if you'd like to ask some questions from some professionals or just experienced traders, make sure you join the Discord so that you can participate in that. You can tell it's getting late. The late night report, I need to go to bed. But that's going to be free. Anyone can participate. And I hope to see you there. That's going to be it for this video. I will see you in the next one. Hope you have a wonderful evening, and good luck on the upcoming week.